Welcome to another installation of I Love Investments. My name is Camari Ellis, and today we're going to talk about dividends, actually dividend stocks and how they relate to inflation. Today I was tagged in a message today in one of the Facebook groups that I'm in called Financially Fit. Shout out to Ima Ballard, but Dexter Crawford Jr. asked me the question, and basically he was asking me, would dividend stocks, or would the yield on dividend stocks be able to outpace inflation? That's kind of how I'm interpreting the question. Above, you'll see the actual question, so I'll break it down. But they basically got a listing of stocks and their yields from another group, and some of the stocks that were on the list were GE, which has a 3.35 dividend yield, American Express. And you know what? I need to research these. I haven't researched these. This is just what is on the list. American Express, they're saying, has a yield of 1.5. U.S. Bancorp has a dividend yield of 2.3%. And it goes on for about 10 stocks. And they got this from another group on Facebook. So to answer the question, would those dividend stocks get ate up by inflation? The answer is no. Right now, the inflation rate is running a little below, I believe it's 2% according to the Bureau of Labor Statistics. And most of those stocks, the dividend alone was paying north of 2%. But what is dividend? All right, so all of those companies, they have sales, they have revenue, and what happens is they make their money, they pay all their expenses, they pay their taxes, and then they have some money left over to pay back their investors. So they take a portion of those funds, they pay back their investors, and that's what the dividend yield is. So you could easily find out what the dividend yield is if you find out what the company is paying back per share. So let's say a company like GE is paying everybody who owns one share $1 per share, and the stock is $10, which is not. So this is hypothetical. So 1 divided into 10 is 10%. So GE would have a 10% yield, and that's actually very, very sexy. But to go back to answering your question, so all of those stocks have a yield that is higher than inflation right now. And I'm measuring inflation by CPI, or Consumer Price Index, which is basically a basket of goods that the government will go do a survey on. They'll go do a survey on bread and butter and milk, and energy. Oh, by the way, you can look at CPI with energy and food or without energy and food, because those tend to be the things that fluctuate the most. So they try to smooth it out a little bit. I don't want to get overly technical and bore you guys to sleep, but that's what they look at. So, but over right now, we really don't have a massive inflation problem. You've probably been hearing a lot of people saying that we are going to have inflation. We don't right now, so inflation is running at about a little less than 2%. So all of those stocks would pay higher than 2%. But I'm glad you guys are actually looking at dividend stocks. It's a great way to build up an income, especially if it's in a retirement account. You can get that income tax free. So feel free to ask me any other questions. I hope that was helpful. If you have any other questions, feel free to ask Amari, and I will see you the next time. Thanks for watching I Love Investments. Bye-bye.